Okay guys, so this I'm going to go over the liquidity rate injection setup. This is something that I trade pretty consistently too, especially on an intraday basis, because you typically see this throughout the week on, like, let's say the M15, M5 specifically during the London or the New York kill zone. So it's a very easy setup. It's very similar to kind of the OTE setup, but this one's it's pretty much, it's very similar in the sense of we essentially have some clear level of liquidity pool. So for this one, it would be like on the downside, we'll have some sell stops. So we'll have the market kind of come down during a specific session. It could, again, it has to be during the New York session or the London session, where the market kind of breaks through the sell stops into a area of like a reference point. So it could be a consolidation point, bullish order block, bullish imbalance, something that is, that's going to offer some sort of support. Typically, we'll see the market kind of come down, and then right around, let's say for the New York session, ideally we can get like anywhere between 8 to 9 a.m. That would be kind of like that sweet spot. But again, if it's like 8 to 10 a.m., that's going to be fine. Also for London, it's more so, let's say you can get a setup in here around, let's say 2 to 4 a.m. The sweet spot though would be 3 to 4 a.m. So regardless, if you get and I'm going to put this, I'm going to put the full kill zone for the New York session, which would be 7 to 10 a.m. Eastern time. So ideally, you would want to get some type of setup like this during that exact time, as it will offer like kind of it will offer like the best type of setup when it comes in during these times. Now, the key thing is just that the price goes below some key level. So it could be a prior day low, it can be a prior session low. Ideally, I usually prefer like a prior day low or a prior weekly low, and then hit the reference point, and then right around, let's say that 8 to 9 a.m. hour or up to 10 a.m. we see that very strong impulsive move, and then we have an imbalance that gets created. Now the good thing about that is once the imbalance gets created, all we do is just kind of look for the retest of that level. So we would essentially be looking for just retest back into the imbalance, which could be also in coincidence with an order block or supply demand flip, depending on the way that the structure looks. And then we just obviously target the next higher high, also anything to the left that we can potentially target. And as you guys can see, all the setups are fairly similar. It's all going to be revolving around liquidity concepts, market structure, time of day, and honestly that's all it really comes down to. As long as you focus on these swings that occur in the marketplace that can offer you a good amount of pips, all you need is a few swings throughout the week that you'll be able to catch and capitalize on. Even if it's an M5 swing play, you know what I mean, where you're just looking for a higher high, higher low, and then price to reach into some sort of premium level, and vice versa on the downside. So I'm going to go ahead and actually show you guys an example of this on the Euro USD. So right here is the chart that I have, and here's a perfect example. I remember I actually saw this chart and took this play. So right here, what do we see? We see that the market recently had an upswing that broke, and I'm going to put the 4 hour here just so you guys can see it. Boom. The market had this ultimate rally. Then let me get rid of this Asian range. We had this big drop that cleared lows, right, into an imbalance. So now this area right here was a consolidation point, and we had a very big move up. Now this could be a very good reference point that we can use later on. And as you can see, this there was an imbalance that was created after the market kind of broke structure to the upside. So we know that this area could be an area of sensitivity because it cleared liquidity pools into an imbalance right here while also making a new high. So this is a very likely area for the market to have some sort of reaction. Now when we go down to the 1 hour time frame, this is the zone, the consolidation zone, and that's the imbalance fill right there. So we can kind of wait and see what happened into the market. Again, we don't have to necessarily go on the 1 hour. We can go on, like, let's say the 30-minute or the 15-minute. Now this day here, it was perfect. We had the market kind of push up. We had the market kind of build up liquidity pool on the like a trend line liquidity, and we start to see right around the 9 o'clock hour going into 9:30, we see an impulsive push. So that's kind of how the market was looking like during right during the peak of New York. And I'm going to put the session time, and I'm going to make that the session time for New York to from 7 o'clock to 10. So this was within our time frame. Now the market didn't necessarily break any big structure in here, but we did break this little minor structure, which was this prior high. And we can potentially look for the market to kind of trade above here. And again, if we move it up to like an hourly time frame, there is an imbalance up there that we can possibly target. And as we play it forward, we see, so the market doesn't even come back to retest that high. It actually just kind of starts the imbalance fill right there. So the market kind of reaches into the imbalance, doesn't even get to the 50%. And again, if the market is typically bullish, sometimes it'll have this type of reaction where it just kind of hits the fair value gap inside this imbalance. And you'll see, look at this nice engulfing bar candle. Typically when you see this, especially if it engulfs the prior candle, that was a down close candle, you usually won't see the market kind of come back, honestly, to kind of like go a little bit deeper, especially after the market kind of already hit a very key significant level. But nonetheless, the market kind of pushes up, and I'm going to show you guys just on the 1 hour to kind of speed things up. The 1 hour did leave a little bit of an imbalance right there, which actually was tested the next day. So this was actually a cleaner setup if you waited it into the next day, which the next day during the London session, you'll see how the market taps right into it. And I'm going to show you guys, this was like right around London, around 4 o'clock. I'm going to extend this right here so that you guys can see it. And again, this imbalance was like an area of sensitivity, and again we had another structure break to the upside. So we know that the market near term is somewhat bullish. The market took out liquidity pool into an area of demand. We had a very strong impulsive push, creates that imbalance, and then we can go ahead and look to target. Let's say you took a long position here, and again, this is just assuming that you don't even refine your entry and you don't even look for an entry lower. We know that the first higher high is right there, and then we see this prior imbalance up here as a secondary potential target. And also if we draw out our Fibonacci, you guys can just kind of utilize the extension targets. So extension 1 is near this, so that's usually a good confluence, and you see that how the market kind of hits that and then reverses in the New York session. So yeah guys, this setup actually occurs pretty frequently throughout the week. You will definitely get at least one of these setups, one or two of these setups, especially if you're only watching one pair. You will find this type of setup or a variation of it throughout. Even if you trade indices, that you're going to see it around across all markets, because a liquidity pool like a prior day low into some sort of reference point happens very consistently, especially when you're in a consolidating market like this was. You know, you can play from level to level as long as the times match up, as long as the technicals match up, and yeah, as long as things align, you will have a better trade when you have multiple things in confluence. And again, one trade like this, like let's be honest, one trade like this is what, how many pips? This is what, 74 pips. In terms of risk to reward, let's say you got in there, put a stop loss right below that body. You know, you're talking about a nice 3-to-1 trade. And that's assuming you don't even get in on this day, which there was possibly an opportunity to try to get in there. Well, not really on the 5-minute, but yeah, nonetheless, this type of price fractal repeats every single week, regardless of what market you're in, whether it's a bullish market, bearish market, or consolidation. You're going to find this type of price pattern. Whether it's on the bullish side over here, or let's say this was the inverse and it took out like a prior day high instead, broke down, retest. You're going to see that setup every single week with some pair. So yeah guys, hope you guys enjoyed that one. And yeah, as you guys can see, a lot of the setups are going to kind of coincide with one another because it's all similar concepts. It's all going to revolve around market structure, key reference points, and liquidity pools. And that's the majority of what I do on a day-to-day basis.